Hello, I'm Doug Jones at Mortgage Magic and Buyers Realty, and today I'm going to talk about debt ratio. There are three things to qualify for a purchase. There's income to outgo, that's debt ratio. There's credit score, credit, and then there's the down payment. And then I call the rules box. But I'm going to talk about the debt ratio, and you could even put this as how much of a loan do I qualify for. And everything is based on numbers. You know, it's kind of funny. I feel like Albert Einstein in front of a big number board right now. But by the way, I'm also a magician, and I do entire shows based on math. But for some reason, when I get to this math, I can't seem to make it as simple as I'd like to make it. So I'm going to give you an example first. How much do I qualify for? The magic number for most loans is 43. Now that's the debt ratio that most lenders will accept for loans. 43. There's exceptions, of course. Sometimes it goes higher, but 43 is the magic number in most cases. So I'm going to start over here just really quickly. If I make $8,000 a month and I multiply it times 0.43, that comes to $3,440, $3,440. And that is how much of a loan, total outgo, loan, anything else that I qualify for. And you notice that's the number right here. So I'm going to give you this example. Person buys for $600,000. They put 20% down, and that's a $480,000 loan. Now the loan payment is $2,504 based on a 4.75 interest rate, $2,504. But you've also got to qualify the real estate property taxes, in this case is $856 a month, and the homeowner insurance, the fire insurance. And we're using $80, so a total of the loan payment, the taxes, and fire insurance comes to $3,404. So this person who makes $8,000 qualifies for that loan if the person has no other debt. Because remember, you take the income times the 40.43, and that gives you the total amount you can have going out the door. So let's imagine the same customer makes $9,000. So now that customer qualifies for a $3,870 out the door total payment. Well, $3,870, that means that customer can have the mortgage, we're giving the same mortgage, and that customer can have $430 in other debts, car payments, student loans, credit cards, whatever. That comes to $3,870. So $3,870 divided into 9,000 is 43. Last example, and I put this last, I go for $10,000. Person makes $10,000. Couple makes $10,000 a month. And they want to buy this house for $600, and they've got the payment at $3,440. So how much other debt can they have? And the answer is $860. Because you take $10,000 times 0.43 is $4,300, and $3,440, that's the mortgage payment, $3,440 plus $860 comes to $4,300. So, I hope I didn't make it too confusing, but the magic number is 0.43. If you earn $10,000 a month, take the $10,000 times 0.43, that comes to $4,300. That can be your total out the door payment to qualify you. If you earn $5,000, you take 0.43, it's going to be half that. So the point is 0.43 times your gross income, not your net, but your gross income will give you the amount that lenders will qualify you to pay for your mortgage. Now, you can send me an email at dougjones95126@gmail. Real easy, dougjones95126@gmail, and I'll send you numbers. And I don't capture people's names and addresses and email addresses to solicit them, so don't even worry about that. But if you want to send me an email and you have some numbers or a question, go ahead and send it to me. Also, if you like the videos, click onto it that you like and subscribe to us. We appreciate it. I'm Doug Jones at Mortgage Magic.